All right, scholars, we're now going to take a look at an unqualified opinion for an issuer. Now, specifically what we want to talk about is, let's identify once again this unqualified, unmodified. It gets me all confused, so let's clarify it. Unqualified is for public companies. Unmodified is for your non-issuers, your private companies. How do I remember that? Well, my way of doing it is unmodified, M. I think of the alphabet, LMN, M for modified, N, non-public. So I remember it that way. And then the qualified, LMNOPQ, P for public, Q for qualified, unqualified. It's the best I could do, gang. So let's take a look at an unqualified opinion of an issuer. First of all, we have the opinion. Notice it's the very first paragraph. Then we have the basis for your opinion. Then we have the CAM, the critical audit matters. Let's take a look at how each of these is done. First of all, notice the title, the report of the independent registered public accounting firm. And we address it to the shareholders or board of directors. We don't address it to management. Notice in this case, it says, we have audited the accompanying balance sheet of X company as of December 31st, X2, X1, and the related statements of income, comprehensive income, stockholders' equity, and cash flows for each of the years that ended, and the related notes and schedules collectively referred to as the financials. Here's our opinion. In our opinion, the financial statements present fairly, in all material respects, the financial position of the company at December 31st, X2 and X1, and the results of its operation cash flows for the year that ended, in conformity with accounting principles generally accepted in the United States of America. Not so hard, nothing there that's too surprising. So let's go on and take a look at basis for the opinion paragraph. Notice in the basis, this is where you're going to have wrap me. All right. This is where you have the financial statements are our responsibility of company's management. Our responsibility is to express an opinion on the company's financials based on our audit. We are a public accounting firm registered with the Public Accounting Oversight Board in the United States, known as PCAOB, and are required to be independent with respect to the company in accordance with the U.S. federal securities law and applicable rules and regulations of the SEC and PCAOB. All right, that was it. Responsibilities. We conducted our audit, A, in accordance, A, of the standards of the PCAOB. Those standards require that we, P, plan and perform, the other P, the audit to obtain reasonable assurance about whether the financials are free of material misstatement, whether due to error or fraud. Our audit includes performing procedures to assess the risk of material misstatement. Right there you have your M's of the financials, whether due to error or fraud, and performing procedures that respond to those risks, such as, in this case, including examining on a test basis, there's an E, evidence, there's your two E's. Our audit also included evaluating the principles used and the estimates made, so you can use those as your E's as well. You'll notice also, as well as evaluating the overall presentation of the financial statements, and we believe our audit provides a reasonable basis for our opinion. The next paragraph is your critical audit matters. The critical audit matters communicated below are matters arising from the current period audit of the financials that were communicated or required to be communicated to the audit committee, and that, one, represent accounts or disclosures that are material to the financial statements, and two, involve our especially challenging, subjective, and complex judgments. Note, the communication of these critical matters does not alter in any way our opinion on the financials taken as a whole, and we do not, by communicating the critical audit matters below, provide separate opinion on the critical audit matters or on the accounts and disclosures to which they relate. And then you would have whatever they are. Notice we sign it. Note, we also have, we have served as the auditor since. That's that tenure you have to have. So right here you have your wrap me. So you have all of your items as we've just shown you in the previous one. And there's my good friend Sugar Bear as he's leading the disco in New York City. One last item is, let's take a look at a comparison between the unmodified LMN for non-issuers and the qualified, which is going to be for, LMNOPQ, P for public companies, your issuers. Note here the introductory paragraph, ultimately in the unmodified, describes the financials. Then you have the responsibility, that's Mr. Dim, that's management's responsibility. The auditor's responsibility is to reports, cram, and then you have the opinion. Notice the opinion is basically the last paragraph. You sign and you date it. Compare that to the issuer, the public company, qualified opinion. The opinion is in the first paragraph. Then we have the wrap me, right? We have that one there that we'll use for the basis for the opinion. We then have your critical audit matters. And then finally, we sign it. And of course, you also have the auditor's tenure, which has to be included in there as well. So that's a great summary of the distinction where you have the privately held companies, non-issuers, opinion at the bottom, while compared to the public issuers, the opinion in the front end. A lot of little differences. Hopefully that summary gives you a great insight and will be something you'll remember when you see those questions on your CPA exam.